Good morning, everybody. Welcome to
My beef doesn't think I'm a person.
Oh, sorry. Well, maybe you're not. I don't know. Yeah, maybe it's AI Angie. I'm stuck. But well, at least you're here. At least you're on the call now.
Yeah.
Good morning, everybody. Welcome to the Grain Blast. It is the 28th of October, all day. It is Tuesday, all day as well. As usual, the goddess of grain, Angie Setzer, will be providing us with a rapid roundup of the latest pricing flows and market moving news in grain markets. But before she does, I'll get the boring bit out of the way. Nothing discussed on this podcast is trading or investment advice. We're not endorsed by anyone. Do your own due diligence, etc., etc. Angie, my love, now that you've confirmed you are human with the podcast box, how are you?
I'm good. I'll be sitting here waiting. And then when you start is when it's like, well, we have to verify you now. And I'm like, this is not how it's supposed to work. I
I'll
don't
be
understand.
I'll be very honest, and I don't want to slag off Podbean too much because obviously that's the software we use, and God knows if they can find out if I'm slagging them off, and then they just delete us. But obviously, we are PIQ's currently we are continuously building our platforms, etc. And it does make me feel a lot better about the bugs that I'm encountering as a first timer on a tech startup, because I'm screaming at my developers over little things, and Podbean, or a much bigger company than us, have some very, very dodgy UX and UI that they need to sort
Yeah.
out.
Yeah, I've learned a lot of things in my entrepreneurial journey here over the last 4 years. And most of them are the things that I complain about are honestly like screaming to the void. Good luck. Have fun. But anyway, grain markets, big things
Yes.
happening here. And I am excited for day two of it's not the Thunderdome anymore. It's the Hope. I don't know. It's something. We got hope here.
It's something a little bit more enjoyable than watching people
Yeah,
just tear each other's face off.
it's been a long 8 months. Like, you know what I mean? Like the corn market, if you look at the corn charts, basically it's just been 8 months of just, so it's nice to, no longer be the blobfish of everything, at least for now. So market wise, we're just kind of seeing a continuation of same stuff, different day. Yesterday was a very strong day. We had December corn join in on the party, or corn in general join in on the party as well. Wheat was up. Both kind of saw a little bit of a swoon into the close yesterday afternoon. So did beans. Beans were up almost 30 cents throughout much of the day. And we went into the end of the day and saw the market kind of back off just a skosh. And a lot of folks were like, oh no, this could be bad. And it's, I think, just a perfect example of the world in which we live now. And that is like everything can be going super swimmingly. And one social media post can kind of,
Yeah.
and so I think you'll see kind of a continuation of that in grains right now. This is probably one of the more, I don't want to say hated rallies, because obviously the farmers and everyone else, they're glad to see
Yeah.
it. But it is one of the, if you had listened to, I'll say everyone else, most everyone else in the industry leading up to the last couple of few weeks here, you would have never imagined this would be possible. Where for me, I have been kind of with the cash grain things that we're seeing, and some of these, like, obviously the crop wasn't as large as expected. That was the first, and first sort of shot across the bow. But then we also had, this solid, we do have solid crush demand, we do have solid other demand. And so, like I said yesterday, it doesn't take much effort to get into a rationing situation in the soybean complex. I know we love to talk about how soybeans needed to go to zero for so long, but if we're even a 51.5 bushel to the acre yield, and you see China come in and buy as much as the USDA is currently projecting or more, which the USDA, there's kind of an argument, it is somewhere between 13 and 16 million metric tons is what it appears the USDA is factoring in. That's 478 million bushels up to, 587. So like the USDA is expecting China to come in and buy somewhere around that much. The rest of the world is going to ebb and flow accordingly. But if you increase that, even if you come in at that level, at a 51.5 bushel to the acre, you have to keep crush consistent, remember, because crush is supported by the renewable volume obligations and the rest of the world increasing their renewable fuel demand as well. And so I'm going to beat this drum for a little bit. And I probably mentioned this yesterday, but we could easily find ourselves in a rationing situation in soybeans, and everyone's been talking about how soybeans needed to go to zero for so long. Now, There's a lot of time before the China conversation. Obviously, I am not one, that's really anticipating this huge sort of shift in China in the whole, but like I said, they just simply come in and buy what is anticipated, and the yield looks a little lighter, and we have, a continuation of strong rest of the world demand. It's going to be an acreage battle.
Yeah.
The potential is there for an acreage battle next year. Moving over to corn, we're kind of just wrapping up what is going on with harvest. Harvest, most folks are anticipating harvest to be around 75 to 80% complete on the corn side of things. And so far, if you look at the basis update, I update basis every morning. It basically go over it. Got probably, I don't even know, different markets that I follow: Eastern Corn Belt, Western Corn Belt, beans and corn both. And if you look at the Eastern Corn Belt, there was some talk yesterday that the market rally was also showing, how weakening things. There were signs that the farmer was selling or something. I saw someone say this on Twitter. Complete BS. If you look at the Eastern Corn Belt basis yesterday, corn rallied 9 cents. We're in the middle of harvest, mind you. We're working our way towards the tail end. Eastern Corn Belt basis was unchanged in 5 locations and was firmer by a nickel in 3. And you saw the river market continue to firm. Eastern Corn Belt bean basis firmed in 3 locations as well. You look at weekly changes, we're still looking at a dime, 15, 20 cents across the board. And even the Western Corn Belt, you look at daily changes there. The biggest one that stuck out to me is we've got Marshall, Minnesota, a plant that's supposed to be sitting in the middle of the epicenter of just too much supply. And they're firming their bid, a dime week over week in the middle of harvest. You've got Western Corn Belt bean basis firming. And so there's a lot of things that I am watching in the cash market. And I've said this before, as an originator, as a merchandiser, you miss your target, you miss what is you're supposed to bring in, because we're constantly, as a merchandiser, you're constantly expected to put together budgets,
Right.
handle margins. You know what I mean? Like, I don't think
Yeah.
people, I mean, like but I don't know if others really kind of know. Like, you have things that you are presented, you are graded on, you are, whatever. And so the easiest thing right now is like, well, the farmer's holding it. And we'll have to see. But yesterday was a huge rally, and you didn't see basis weaken. As a matter of fact, you saw CIF, the Gulf bean basis, firm 4 cents, while futures were up 27. And so the
Eesh.
cash market is telling you, right, that something is off. Something is weird. Like, you look at, what was going on last night. We had a bunch of trades, some additional tender trades. U.S. corn is the cheapest. This is from my friend Eduardo at AgriInvest. It's the cheapest out of the PNW, in the no-fi tender day. CHS, we're getting South Korea business February 5th, oh my gosh, February 5th through the 15th. Basically, we're looking at some, continuation of big demand in that regard. And you're really seeing, from an overall standpoint, a continued lack of competition globally. There is talk that China is trying to source some corn out of Ukraine, and some of these other things, but you also have some pretty major issues with Ukraine having less than half of their corn crop harvested versus a year ago due to poor conditions, which leads to toxins and damage and all of these other things that our friends in China are also dealing with. So then into wheat, we're seeing Russian wheat offers, into the world market continue to rise. There's a lot more talk that, if the crop was as big as anticipated, it's in weird logistical places. And so we've talked about that before. Like, your balance sheet is fine. Like, your balance sheet is one thing, execution is another. You can have substantial carryout on paper and still, I don't want to say not necessarily feel it in the cash market, because you should. Eventually, cash grain should ooze into the places that it's needed. But, what we're seeing from an overall standpoint at this point is, even with futures rallying, you're seeing basis remain strong, and you're not seeing aggressive selling that one would somewhat expect if the crop size were as large as what folks had said. And so that's our main focus. Like, obviously, we've had some back and forth with what's going on, U.S., Russia, Putin. Putin's like, wait a minute, like, you were getting too close to the other guy. And then, so whispered in Trump's ear and was like, hey, he's playing you like a fiddle. And then he was like, oh, not on my watch, and so you've kind of had some back and forth. And, Trump with his, well, whatever Ukraine does with their missiles is up to Ukraine, and some of these other things. And so we are seeing a significant escalation that is creating issues with logistics and the ability to ship. And, we've had Turkey and places like this, Egypt and some of these others, really just centered on this cheap Russian wheat. And if you can't get cheap Russian wheat, where's the next step? You have to go to
Right.
Europe, go to, to the US. Argentina is there. Like, don't get me wrong, Argentina is probably going to have a record crop. Australia is going to have a really large crop. But with the Milei win and all of these other things that we're seeing, I think you're going to have a lot slower farmer selling pace out of Argentina than anticipated, because they've gotten to where they're like, pull the export tax.
Yeah.
You need to incentivize this for me. And so we'll see. But overall, too long didn't read version of what's going on in grains right now. I think there's also a factor of money flow. We're not necessarily seeing it in open interest. We're not seeing a rise in new people coming in. We're seeing more of a closing of old positions. But I'm going to be watching that really closely, because if you look at gold, if you look at cattle, if you look at some of these other markets that had gotten really spicy, they were cheap and they were a good buy. And if you look at soybeans right now and you kind of say, okay, what has the most upside potential? Which, granted, now we're up 40 cents from Friday's close, so we're getting to where she gets a little less upside potential every penny higher to a certain extent. But if you were to look at it, wheat right now, to me, it would be a reasonable buy if we maintain this posture. Corn, beans, a lot of them right now are actually cheap on the whole, and so we'll just kind of have to keep an eye on that and see what happens, and go from there.
So I
But
got a
yeah,
question
that's
for you. Because we've been talking basically since the start of this whole podcast series about the kind of the increasingly widening gap between futures and cash, and how they've always had a tendency to sometimes kind of to basically be in different mindsets, but now it seems to be getting a bit silly.
Yeah.
Do you think this could be something to do with like a more generalized or kind of an increasingly apparent problem, which is kind of the market structure, by which I mean it's now far easier for retail, etc., to get access to agricultural markets. So
Yes.
by definition, there's more flow going into the futures side of the agricultural markets. Potentially, that's why we're seeing a widening gap between futures and cash, just because there's more kind of participants that have no real, well, most of them probably don't even know the cash market exists. It's not like back in the day where the futures of commodity markets were only used, especially agricultural markets, were only used as hedges to the cash market. Now it's its own kind of asset class for retail punters, basically.
Yeah. Well, yeah, it can be. Like we saw that in 22. Like there was a whole entire thing in 22 with ETFs and the wheat market, and watching it limit, and the participation that we saw in some of these other things. And so, yeah, I mean, when you see that's why, like, I feel like I scream into the void a lot, because I focus so much on cash and physical movement. And, most folks that we lean on as major market analysts in the grain industry love to talk about cash, and they talk it poorly. They talk it wrong. Like, I saw someone the other day say something about, we're going to have significant deliveries against the November bean contract. Girlfriend, we're at 88% full commercial carry. As an elevator, you are basically printing cash to hold beans out of the pipeline for at least another 4 weeks. You're not going to deliver those. A. B, the majority of the
Right.
record or the commodities that are able to be delivered are ADM. Like, ADM is short. ADM's the one that's offering the free DP. ADM's the one that's, doing all of these different things because they have such a large presence in the crushing industry. If they did deliver, it would be just to F with the spread. Like, it's not because the physical market is telling you to do that. But yeah, half the traders couldn't identify a soybean in the lineup. And I'm one of them people. I didn't know what a soybean looked like when I started. We didn't have soybeans relatively. I grew up on a dry bean, pickle, pea, potato. Like, we had all these other things like soybeans. What? But, yeah, there is a big problem right now with a lot of folks that speak the loudest in agriculture and trying to speak of cash and what the
Right.
farmer is doing and how the farmer feels. And they haven't spoke to a farmer in months. Like, they have one farmer to talk to. They talk to Scott Bissent, new North Dakota farmer. Like, that's the
When he said that, I mean, come on, what is going on?
I know. Next time I want to see him in bibs and a pitchfork, because he's
Yes.
But,
Please,
but
someone
yeah.
make that happen.
Please do. But yeah, you're just going to see, a consistent sort of monitoring of the cash market overall and what is happening there. And so far, the signs are good. If we see SIF back off in a big way, if the Gulf basis backs off in a big way or something weird like that, then it's a sign that nothing's happening. But, one of the things I like to pay the closest attention to, is just what is going on along that St. Louis market, and some of these other places, because that's where like your Kafko structure and some of these other ones are. And you've seen it firm. You've seen strength, even with the market stronger. So we'll just keep watching it until it throws us a different sign. But for now, at the very least, harvest pressure is behind us. We're going to see what Thursday brings, and everything else is just kind of going day by day,
Perfect.
So
Well, on that, thank you so much as always, my dear, dear friend. I am actually just before the show. Well, I am halfway through just reorganizing and rejigging the PIQ Ags focused Twitter list. So maybe I'll post that out and get you to share that around all of our farmer friends, because it will make life a lot easier on Twitter/X, whatever we're calling it, to follow just the stuff that's important for grain markets, because we do appreciate that Twitter, even though it's a great source of information, can be a bit of a minefield when you're trying to filter out the wheat from the chaff. Look what I did there. And that was completely unintentional. Eh? And on that, I'm going to say goodbye, and I'll see you suckers later.
have a good one, you guys.
See you later. Goodbye all.